Talk us through the price action here. This report came out. They're talking about more regulations and restrictions on freedoms here, and yet we see stocks bounce back. What's behind that?
It's pretty dilemma situation, right? In terms of the local Hong Kong stock market, as we all know, when we're talking about the Hang Seng index itself, it's about 50 stocks of the Hang Seng index components. But if we talk about the correlation between these stocks with the local Hong Kong economy, honestly speaking, I don't really see a very strong correlation. So when we talk about Hang Seng index, we talk about Tencent, we talk about HSBC, China Mobile. Oh, okay, maybe some of the local property developers, but nothing beyond that. So when we talk about the Hong Kong stock market, simply doesn't really related to the Hong Kong situation right now.
Yeah. If you take a look at, we saw these PMI numbers coming out of Hong Kong as well, which actually was better than the previous month, although we're still in contraction. Do you think that this market is still undervalued?
You mean the Hong Kong stock market?
Yeah.
Oh. I really can't give a very high valuation of the Hong Kong stock market. As we all know, some of the local developers, they can only have like a single-digit PE, and also some state-owned banks, they used to have single-digit PE. So in terms of the index itself, I cannot give comparable high valuation to the other peers market in the US or in Europe and etc. So if we talk about historical PE now, we are now sitting at a relatively low valuation, but I don't really see any upside in terms of the valuation of the Hang Seng index itself. And moreover, I think the Hang Seng index will just stay at this moment after the rebound to 27,300 and pull back a little bit to 26,000. That's about it in the next couple of weeks. In fact, I don't really see so much upside when we talk about the retail sales data, when we talk about the protester and the police action. I just cannot see this situation will come to any end any sooner or later. So we'll continue the situation. When we talk about the Federal Reserve, yes, I believe they may have another rate cut in as early as in October, but I don't really see there's any rate cut for those. No matter the larger banks or the smaller banks, they have no room to cut the prime rates. In terms of the rate situation in the past, when the Federal Reserve kept on hiking interest rate, they didn't follow, only once last third quarter last year, so I don't really see any downside for the interest rate in Hong Kong. In fact, some of the banks, they already hiked their saving rates in a couple of days ago.
Dickie, yesterday we actually spoke to Isaac Poole of Oriana Financial Services, who has a pretty pessimistic view and sees the Hang Seng falling much further. So just take a quick listen to what he had to say here.
This is a bad outlook that's not being priced in properly into equities at the moment. We look at the equity market here in Hong Kong and think it's probably 15 to 20, maybe 25% overvalued right now. So difficult to make a case for bottom fishing.
What's your view? Are you as pessimistic as Isaac?
Okay. Well, I'm not bullish, as you all know, but I'm not that bearish either. I strongly believe that Hang Seng Index will find its support at 24,900 in the fourth quarter. That's my point of view. In fact, when we talk about the Hang Seng Index, as I said, some of the shares does not really, affected by the situation like the increasing tension between China and the US, and also US and Europe. Like, as I said, like China Mobile, like Tencent, they don't really get affected. In fact, when we talk about the state-owned banks, their valuation already very low, and also some of the local developers. As I said, the interest and environment is not that favorable to them, but in fact, they keep on rebounding in the past 2 days. So I don't really see that so much upside. But what if the situation get worse? The local political instability. That's another question. But what I see now, I do think that in terms of the performance of the local Hong Kong stock market in October, I think the Hang Seng Index itself will stay at this level and between like 24 24,900 to 26,000. But in terms of some of the retail stocks, some hotel operators, that's another story, the total disaster for them. Like even some of the luxury goods brand, their share price dropped significantly in the past. It's also because of the situation in Hong Kong now. They're firing people not in Hong Kong but everywhere because the to-be on sales, the jewelries and also high fashion handbags. I don't see there's any hope in the fourth quarter.